Alexis, so we're just seeing this, I suppose, moment of reprieve for this morning, 23 minutes into the cash trading day at home in Europe. You would maintain that the ECB needs to address the market concerns over the coming weeks. And in part of that, you say that they should take a more dovish stance on the path of future monetary policy. Why?
Well, I guess at the moment, with all of the volatility we're seeing in the market, the risk is that that starts to seep out into the real economy, and I think that's what the ECB needs to address is, do they see some risk of a further slowdown in growth momentum? I mean, we need to remember that in the first quarter of this year, the growth figures out of the Eurozone were already somewhat weaker. At first, we thought that that may be exacerbated by poor weather, but the second quarter activity numbers haven't really rebounded. So, you know, the ECB, I think, needs to make at least some comment on how market nerves may be affecting the real economy.
I suppose that comes back to that negative feedback loop, and that takes time, doesn't it? We've seen that time and time again between the actual storm, the eye of the storm, and the reality of data. With that in mind, how much slippage would you expect then in terms of rate hikes? I had a guest yesterday from Credit Suisse, basically one of the guests yesterday, saying that they thought that the ECB would be able to go for rate hikes before the end of the year. Do you see that as a possibility, or how far into the distance is that now?
I very much doubt that we'll see interest rate hikes in the Eurozone this year. The ECB still has its QE program in place and has made strong suggestions that they would like to end QE before even considering doing anything with interest rates. So I think we need to see the QE program wound up, which will probably happen by the end of the year, unless the economy really does start to slow down into the end of the year. The ECB has issues as well. The extension of QE is very tricky because there is a lack of eligible bonds for the ECB to purchase. There are constraints because of the capital key and issuer limits. So I think that, you know, the real risk here is if we start to see some impact of the Italian nerves in the real economy, that the ECB doesn't have much ammunition left if they need to ramp up next year. But as I said, I think the base case is QE ends this year, rate hikes probably on the table in the second half of next year.